Welcome to the Traders Show. This show is brought to you by Pepperstone. Pepperstone is an award-winning online global forex and CFD broker. It offers unparalleled service, exceptional pricing, and fast execution speed. Pepperstone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Pepperstone Markets is regulated by the Capital Markets Authority. To open an account with Pepperstone, you can click the links on the descriptions below.
About that. And that's as we get into the second part of it, if you're looking to become a money manager.
Yes.
I think number one, money manager, if you want to become a money manager, and now this one requires way more work than this other person who's just researching for someone to manage their money. Now this one is going to take so much work, so many years, but it's all worth it. It's more worth it than this person who's looking to just look for an investor.
Yeah.
So first of all, you need to know about the industry and what Taras is saying, regulations of the market. Like the Taras just said, we're very young, it's 3 years. Like SIB are the first to get their license. They have a 3-year track record. So this industry is very young. The industry for trading, people have been trading for over 10, 15 years. But the industry for money managing people publicly is very, very new. And that's because before there was no really regulations. Now that the regulations came in 2017, August, now that they've come, now there are many things that you need to look at the table. One, if you want to become money manager, this is part of research. The basic things, 5-year track record, need what? A degree?
Yeah, degree.
Need to be on a board. And 5-year track record of profits, not
yes.
track record to have been trading, enjoying my life. Track record, Evo. So, you need to be on the board of a board of what?
A certain company.
Of a certain company. You need to have, I'm sure, more or less a team.
Yeah, team, CEO.
Yeah. You need competent people.
Risk manager.
A risk manager. And risk
compliance
manager.
officer. Exactly.
So you need, it's a whole basket of many things that you need to put together. And that's when now...
A net worth. You have to have a net worth of more than 10 million.
How could I forget that one? You need to have what? Minimum 10 million Kenya shillings, which are $100,000. Yeah, liquid. This is just in case. This is ile ushiki. You're not touching it. This one is just there.
Yeah.
For liquidity, if maybe something happens, people want their money, at least you have that 10 million.
Yeah.
Liquid cash, which you can give to people immediately. So those are the many things you need to know. And basically, you can just go read the CMA. It's the Money Acts, the Forex Acts or something.
Yeah. On the licenses.
It's on their website. You can get to see all these regulations that they have. And then once you know that, okay, now you come back to reality. Okay, I need 10 million. I need 5 years. Yeah. What do I need to do? Now, here's why you want to become money manager. First things foremost, we've already talked about it. I won't go deep into it. You need to learn. And the only way you need to learn in Forex, 1, get education proper, get mentors. 2, practical. Like you're saying, nothing beats experience. Lazima utrade. Not demo, not hizo story. Live account. Put the money on the table. And you need to trade good amount of money, which you can proper risk management. You're proper to live off it. So you know the realities. See at a track record, your $1,000 account. Track record, your 100,000. You're growing it. You know, this is the amount of money I can get so that I can pay for overheads I have. Because, of course, when you become money manager, you need office. So you need a lot of things. You need a team. How am I going to pay people? Can I pay them by trading in the markets? Now, this one I've gone extreme. This one is not, I'm not talking about uko chini. We're talking about becoming money manager.
Yeah.
So you have 100,000, 1 million Kenya shillings, which is about 100 million. And that's what you're saying SIB started with.
Yeah,
100 million shillings, Kenya shillings. And now they've grown to?
6.5 billion shillings.
That's what,
imagine
$60
in 3
million.
years. That's some exponential growth.
So there's money out here. All you need is now that skill, and that's what I'm talking about right now. You need to put it into practice, practically, pragmatically. What I'm just talking about. You have $1 million. This $1 million you're making now is not just for your living expenses. You're making money. How can I pay the office rent? How can the way Gitosh normally does? Asha sort kila kitu for 1 year.
1 year,
like you know how this. You're not going to look for the market. You're not going to the markets to look for rent for next month, money. You're not gambling. It's more structured, more in-depth, and you know how you're going to do it. So that's, I think, my main point starting off for how to become money manager. A lot of practice, a lot of trading.
Yeah, I think for me, I also have very similar points. The experience, the track record. Okay, if you believe in yourself, you can take that step to go and look for a license to trade. And also, I was being told this by a friend. I'm not really sure. I'm supposed to do some more research on it. In that, you can invest for under 99 clients.
What?
You can invest for under 99 clients before you now go public. Like after 100 clients, now you're now you're public. You get like you can have 99 clients privately.
Yeah.
Trading for under 99 people, and like the regulators won't come for you. You get?
Oh, for sure.
Yeah. As long as no one is raising an issue, you're not like as long as you're just trading well. Yeah, you don't need a license. Yeah, you don't need a license for under 99 clients.
Yeah.
So above that is now when if you want now to take your trading to the next level.
Yeah.
Get to those level of managing 6 billion and stuff. You have to go public. So if you want to go public, that is now like literally una handle hustles za watu. Like isn't money from people hustling, people saving, people's pensions. So like that level of trading is way different now from how people trade as retail traders.
So now you're responsible for a lot of people.
It's like even your trading will change.
Of course.
If you're going to to that route. Like you'll be taking trade in a professional way, not just waking up and I don't know which trade Ken has. I don't know which bottom trades exactly. Like trades are reported to the fund manager. Immediately the trade is executed.
And risk manager.
Yeah, and the risk manager also. So like that level of trading I think needs you to, if you're willing now to become, that's now professionalism sasa. See ile tu at retailers you can choose it's now you're choosing to put like to take the risks to handle millions of people. Like if these people choose to stone you, bro, una dead. Yeah, so like I think it comes with just confidence in the game, in the skill. Have you developed the skill long enough to go public? So until that point, I think don't even think of becoming a money manager under your first 5 years of trading. Even if you're listening to this podcast and you have someone's money, I can tell you guys, I got into problems. So, hey, if it were like just give out the money
You'll
until
share them one day.
Yeah, until like you've known how to trade well. So it's a very worthy advice, trust me. Utakuja usikie tuna hii podcast after umepoteza pesa mingi sana.
Remind yourself.
So like before you get that experience, don't get into an industry that like, it's a whole different industry. You can be trading, yes, you have 5 years experience, but that is in retail trading. You're not handling clients. No one is pressuring you.
Need to climb up the ladder from retail to institutional.
Trust me, handling clients is difficult. Missy, but from seeing what my friends are doing, it's difficult. Nitosh was telling us the other day, like people watu in Nairobi wanatafutwa na mabunduki. Juu ya pesa hii ya forex. Anasema the forex industry is too dirty, like because of those people who are not pros in trading getting into a pro industry. See, it's like you want to run a marathon na umezoea 100 meters.
Hawezi.
Utafika the 400 meters, yani utashangaa. These guys still have like another 40,000 meters unakata tu. So basically you develop yourself until you get to the point of becoming a money manager. You just don't wake up one day and you're broke and you decide, hey, I want to manage money, let me just start pulling funds. I work hivyo. Like it's a whole different industry, and that industry needs to be taken very, very slowly. The processes are difficult. We've seen a friend of ours getting the license, and it's hectic. It's a merry-go-round. It's just exactly. Person. You still need resilience in any idea. Trading resilience iko everywhere. Even looking for that license needs resilience.
Yeah.
So becoming a money manager is difficult. I think I'll come and talk about this topic more when I'm in my 10th year of trading.
10th.
Yeah. So give me another 5 years.
Okay.
Maybe naweza kuwa na a few clients.
So to visit you on your 99 clients.
I want to start building my clients by the way, slowly.
Good.
So I think to just add on to what Lawi and Caleb have said, becoming a money manager, I think ultimately that's the goal of every trader. I think the point Lawi was trying to make by saying, if you're doing it and you're not competent, that's the point. If you're not competent, please just give back the money, focus on being competent first, then you can come back and do it. Like you can now come back and take out some money. So if you look, for example, into some of the hedge funds across the world, many people have this assumption that all hedge funds make money. That's the biggest fallacy. In fact, most hedge funds don't make money in the long run again. So you find that even there's a very, very good show which can actually depict to you how hard it is to make money in the markets, and especially consistently. The show that we normally watch on YouTube, it's called?
Which one? The one?
The one for money managers, hedge fund traders.
Wall Street Warriors.
No. It's called? The one by Phineas.
Oh, yes, it's just the page is called Phineas.
Okay, you can just search on YouTube Phineas. Akale will attach links below.
Yeah, I'll put the link below.
You can just check out some of those money managers.
Nice. Yeah.
So
the history,
the history of some of these people, and these are exceptional money managers. So this guy does not even cover people who lose money, but even these people have had some down years, have had some withdrawals, heavy withdrawals where people just take out like
the money is
50% of the fund is gone. Like you've just lost 14%. And 50% of the people withdraw money.
Pull out.
They just pull out. So you also need to really think hard if you're going into some of these businesses on how you're going to tackle some of these things. For me, I think the most important thing if you're going into this business of money management would be consistency. There's no loyalty in this game. That's for sure. Like the minute you start losing money, people will just pull out.
Of course.
That's it. Like, but if you can be able to make consistent returns, I think the philosophy I'm adhering to, or the one I'd buy into, is one by Howard Marks, where he says the secret to exceptional performance is to have consistent average returns during the good years and to avoid doing and to do exceptionally well during the down years. Like when most people are losing, ensure you're doing well. And when most people are doing above average, you're just doing average. Because in a bull market, everyone performs well. It's during the bear markets that people get hurt a lot. If you can be able to like twist it, and at least during the bear markets you have something, and during the bull markets you're just performing in the norm, you can be able to like do well. We're not saying don't have down years, obviously, but ensure your down years are capped, like they're not really major, and you don't lose like a substantial amount of cash which belongs to someone else. Because
basically the volatility is stable.
Exactly. If you're losing, let's say we are 3 money managers, let's assume there's no longer financial lab. Now he's doing his own stuff, I'm doing my own stuff, and you're doing your own stuff. Trust me, if I'm making 60% and you're making 30%, but my 60% has some volatility, you're likely to attract some of my investors because they don't want that volatility. There's a very, very good, there was a very, very competent person on this. So he runs a money management firm in the US, and he was saying people come to him and they ask him, okay, I want to invest. I can't remember the name exactly. That's why I was trying to remember, but I can't remember. But I remember the context of the story. So people come to him and they say, okay, I want to invest money. And the first question he asks them is, how much are you willing to hold on the downside when things are not going so well? How much are you willing to hold? And people normally say 30%, 20%. And he was asked further, now how do people perform, or how do people behave after that? And he said that 5% everyone wants to liquidate. When they come in, they say, okay, I'm willing to hold up to 20%. But the minute they just lose 5%, they want to liquidate. They don't want to hold anymore because they're making the decision emotionally. So the point was, there are very few people who can even make money consistently in the markets, even if you're dealing with a competent money manager. Because you find that, and I think also Jack has done a very, very good job on that. I actually remembered, And most people, how do they choose a money manager? They focus on past returns. And one thing we must remember is past returns are not a guarantee of future returns. Meaning, most people will go to the money manager who's been doing exceptionally well. And there's a very, very high chance after doing exceptionally well, there's some down here coming ahead. And the one who's been losing is likely to have an up here very, very soon. So you'll find that many people, how they make decisions is they'll go into a money manager after he's going up and go leave a money manager after he's gone down. Well, you should be doing exactly the opposite. If someone has been doing so well, be very cautious about it. If someone has not been performing very well, try and understand why. Maybe there's a very, very good reason, because market conditions are some of these things. You find your system was doing well during a trending market, then all of a sudden it's not doing very, very well. So those are some of the things you really need to be cautious about when you're going into money management. I think so.
I think to finalize on this, I think I'll give out another point, and it's like very few people know about this, like even long-term traders, but there's something called percentage allocation money management. So it's basically offered by brokers. So the PAM. So some brokers, okay, for Kenyan brokers, if you can't get a PAM if you're not licensed, but there are brokers outside which offer PAM accounts. So even a few years ago, you could get a PAM account from a foreign broker, and but if they come to put business here, the PAM will be shut due to the regulations. But okay, basically a PAM account is a trader. Let me first put it in terms of a trader. Let's say for you today, you want to start money management slowly and not dealing with clients directly. Yeah. So you open a PAM account with a certain broker. I think most brokers have a minimum of $1,000. Yeah. So put $1,000 there, and you should trade for 3 months before that PAM is approved first. Mm-hmm. So on those 3 months, you should be consistent.
Okay.
Yeah. So you should be consistent for those 3 months. Then after 3 months of consistency, now the broker starts. Okay, like not actually starts. Now the broker publishes your track record,
your performance.
Yeah, your performance publicly on their PAM list. So investors can just come and choose any trader. So you click on a certain trader, you look for how long he's been trading. So basically that is, I think, because in Kenya here, tumesema, the business is very, very young. Yep. You can't get many traders with their track records showing.
Yep.
So there are many traders out there also with track records in developed countries. Mm-hmm. And you can take advantage of that space also if you are willing. All this musema, if you're willing to take risks. See, exactly. Risk, yeah. If you're willing to take risks to invest in someone you don't know in the Bahamas or in the UK, in the US, that is okay. Kabisa, that's okay, because we've seen very, very many PAM account managers doing well since 2010. You see, so like you can take advantage of also, like we're living in a global world. See, lazima tu if you want to invest in forex, not after 2 hapa SIB ama the 3-4 traders we know.
Yep.
So you can also recommend someone.
That's the beauty of it, by the way.
Yeah.
Yep.
Like there are many traders now out there with good track records. You can see their volatility. You can see their maximum drawdowns. You can see their percentage allocation, like what percentage of profits are they taking and what are you keeping as an investor. So it's like most people don't know about this in terms of most traders don't know it even exists. But it's also a very, very good way to grow your skill, like as a young trader. Because I think the main reason why trading is difficult for money managers who try to start out young is handling those clients. You see, clients wanakusumbua. So like the moment you're not at a good mental space,
that's
it. Where's the trade? And that's the main reason now why actually most of them blow, because of the pressures from the clients. Client amechukua, like you've accepted to take money from a client who demands high risks. High returns, which you can't reach. So you start going out of your system to satisfy an investor and forget to trade rationally. So I think that's the main reason. But if you want to start out in trading, it's also a good challenge. Get that $1,000 with that broker and start trading. If you believe you can create consistency, now this is someone who is at least past 5 years and under 10 years. You can earn more clients online. So you can just have clients online dealing with now you be like just the broker will be the one dealing with you. So the moment these clients withdraw their money, your profits are cut and they come to your personal account. So it's also another method of investments. So if you feel like there are not enough money managers in Kenya, go to certain brokers. I don't think I'll recommend them here. So go to certain brokers and you have to do the research, basically. Go to certain brokers and look for those good money managers with experience. You can be lucky to find someone who is consistent and very, very experienced. So I think that's also another a way to invest your money in the forex market. Yeah, and also for a trader to get clients. Yeah.
Okay, as we finish off, let me finish with some data over here. I was researching a bit. As Ken was saying, managing hedge funds, whatever, is the biggest goal for any trader investor to start one. So just some data. I've been trying to look for actual data, but different sites showing different data. But just to look, I want to show you guys, as you said, what it takes to become what are the rewards of being consistent, good trader, and the success in this financial world. So I want to show, just to list top 10 or what, biggest hedge funds, how much they have, and then 2021's Forbes list of hedge fund traders, hedge fund managers.
There's a Forbes list just for traders.
Because it's Tokyo the other day over here, but I'll show you. So this one has
exceptional money returns
for 2021.
Okay.
Forbes 400. So that's on the list. But anyway, so for Investopedia, the world's top 10 hedge fund firms, okay? So according to Investopedia now, so number 1, they've put BlackRock, okay? BlackRock Advisors. So BlackRock is known as the largest investment manager in the world, with about $8 trillion total. $1 trillion. But they're saying over here they have BlackRock Fund Advisors, which has about 1.9 trillion assets. But then they have an internal hedge fund. So they have an internal hedge fund started in 1994 that handles $789 billion.
It's the biggest hedge fund, right?
Yeah, it's internal inside BlackRock. Then we have another one that I've never heard of. This one is new. It's called AQR. Have you ever heard of it?
Yeah,
AQR.
I think I've heard
of it.
Also,
AQR Capital Management. It's based in Greenwich, Connecticut. And uses quantitative analysis using the quants, almost like Renaissance. So AQR has, as of March 31st, 2020, they had about $164 billion under management. Number 3, the guy we look up to, Bridgewater Associates by Ray Dalio. They're also in Connecticut. Them, they trade pension funds, foreign governments, central banks, university endowments, and
individuals.
They don't do the individuals. Them, they have, as of March 27th, 2021, $154 billion under management.
And like there's no returns. There's no 2020 returns.
Over here, they've not shown. It's just a list of those top. Yeah, and how much they have. Renaissance Technologies, this one is by our guy Jim Simons.
Comes in at number 4.
Yeah.
Seriously?
Hey, I mean, I must.
Hakuna hiyo pesa yote hivyo?
Yeah.
Yes, how much?
As of June 3rd, 2021, 130 billion assets. 130 billion, and it's growing. Mathematicians, Jim Simons. Another one called Man Group. This British hedge fund has more than 230 years of trading experience.
Serious?
Wako na ngapi?
230.
That's what I'm saying. Started in 1784.
Wow.
Imagine. Also, I'm looking at these things. They have, as December 31st, 2020, Man Group has $123 billion under management.
Yeah, just before you go, just a point. Jim Simons, me that thing was, Jim Simons has made 104 billion profits from the markets. Hiyo ni profits kwanza. Hata si yes fund. Hiyo kwanza ni fund mingi sana huko nje. That's just purely profits. That's like outstanding, man.
Because for Jim Simons, him is crazy. Because he doesn't take out people. It's just internal money.
Yeah, internal
more
money.
Or less.
Yeah.
And he's the best performing among all those people.
He's the best performer.
Tutafika hapo Forbes. Yeah, crazy. So the next one, Elliott Management. Let me move.
Paul Singer.
Yeah, founded by Paul Singer in 1977. As of this November 13th, 2020, they have $73 billion. Two Sigma, I'm sure you've heard of Two Sigma.
Yeah.
Two Sigma, $68 billion under management. Millennium Management, they have $42 billion under management. Started in 1989. So most of these people just started in 1980s, 1970s.
Yeah, that's when hedge funds started, most of them.
Yeah.
Picking
that's
up.
when the world started of hedge funds.
We have another one called Davison Kempner Capital Management at $7 billion. Citadel, our guy, has about $33 billion under management. And so that list for top 10 for them ends there. And then now, richest Forbes. So this is the topic. The richest, you can see, the richest hedge fund managers on the 2021 Forbes 400 list.
Yes.
This year. So the wealth of hedge fund managers, I'm just repeating myself.
That's not their performance.
Not really. It's just showing the list Okay, so listen to this. It's a good year to be a hedge fund billionaire. Today, Forbes released 2021 edition of the Forbes 100 list of the richest people in the United States, and the 25 wealthiest hedge funders are worth a combined $220 billion.
Like Elon Musk bado yani hata ukicombine na watu. Hey, how rich is this man, bro? Umecombine wase 30 billionaires.
25 wealthiest hedge funders.
And what can you learn from that?
In terms of
Like when I just think about it, I always think about there are very few people who take up everything. Like ile Matthew principle. Hata kwa rich people.
Matthew effect.
In fact, this law is for every continue. I'll remember
finish
the
off
law.
with it.
I'll remember the law.
So, hedge funds. So the hedge fund in the first half of 2021, hedge funds have returned an average of over 10%. Over 10%. Kuna mjinga nitafuta 100% in this market. Anyway, the bar for the entry of the 25 richest hedge fund managers increased to nearly 3 billion this year. So, kaunta kwa your list. Ujikaze. Anyway, what are their net worths? Number 1, your guy, Jim Simons, $24 billion. He's the 28th richest person in the Forbes 400. Hey, my friend. Number 2, our guy, Ray Dalio. Panda. So Jim Simons' net worth in 2020 was 23.5. Now he's 24.4. Ray Dalio in 2020, his net worth was 16.9. Now in 2021, 20 billion.
4 billion
added 4 billion. Number 3, Kali Khan. 2020's net worth was 14 billion. Now it's 16.6. All these guys are up. Ken Griffin, 16 billion. Now it was 2020 was 15. Now it's 16 billion.
16 billion.
Steve Cohen, 16 billion as of 2021. David Tepper, 15.8 billion.
If you don't know Steve Cohen, and you watch Billions, that is the Axe guy. Axe guy is the Steve Cohen, but that's drama.
More or less, yeah. David Tepper, 15.8 billion. Israel Englander. I think I had Israel Englander first from UK. I think you're telling me the guy for Millennium Management at the time.
Na Leon Kupa manako huko?
Wait, we're number 7.
Kupa manako hapana.
Acha tuona. Let me reach top 10, I see. So Israel is worth 10.5 billion. Chase Coleman, 10 billion. George Soros, the man who made 1 billion in one day, 8.6 billion.
Soros.
David Shaw, D.E. Shaw, the guy. If you don't know D.E. Shaw, he hired what's his name? Jeff Bezos.
Jeff Bezos was working for him.
Jeff Bezos was working for him. D.E. Shaw back then in his company, in his hedge fund, and yeah. But anyway, David Shaw is worth $7.5 billion. Hey, number 11, Paul Tudor Jones.
Hey,
PTJ, 7.3 billion. Hey, your guy, msewenyu, number 12, Stanley Druckenmiller. Last year he was 4 billion, now he's 6.8.
That's what I make pesa.
Grow.
Kwa hii market tu yani.
Same market. John Overdeck, 6.5 billion. David Siegel, 6.5 billion. Philip Lafnot, 6.5. Our guy, Bruce Kovner.
Bruce Kovner got
6.2.
Michael Marcus aliachwa wapi na huyo jamaa? Alimfunza kama mwacha.
Paul Singer is on the list, uko 4.3 billion. Daniel Loeb, I first saw him on that Phineas thing. We'll put a link below, 4 billion. John Paulson is the only hedge fund manager this year to go down. But him is retiring, 4 billion. Anyway, so the list goes on and on and on.
Interesting.
Ackman, 3.1 billion.
Bill.
So anyway, that's the goal, guys.
That's the goal.
Billionaire. And as we keep saying, the financial world has the most billionaires in the world.
Yes.
In any industry. They're the ones who top on the list of billionaires. There are about 2,000 billionaires. So far I've listed around 25 of them.
But let's not forget the probabilities of becoming a billionaire in Africa.
Hey, don't forget. We gave that data some time back.
But I feel like that will change very, very soon.
In terms of, you believe developing countries are coming up?
Very, very fast. Very, very
So what was your point, Ken? Have you remembered?
I'm trying to remember. But the point was,
You're
And
talking
I've
about
actually
Matthew
told
effect
that-
or something.
No,
What
no,
are you
it's
going
not Matthew. I've actually remembered. It's the idea that for every 100 writers, 10 writers are responsible for it's a square root law. I'll remember it, then I'll tell you. But the point is, for like the first 10 wealthy people, there's one person who's wealthy like all these 10 people combined.
Yeah.
Remember, like for the first 10 best writers, what they're accomplishing can only is worth like what 100 people combined will do. Like it's a power law. Like as you go higher on that competence hierarchy, you tend to have much more. But it's not the Matthew effect. I'll tell you that next time. I'll
the
find
Matthew
it.
effect, of course,
I'll
is
find
different
it.
to what you're saying.
I'll find it and I'll tell you.
What is the Matthew effect now, since you've mentioned it?
The Matthew effect is that for those who have, more will be given unto them, and for those who don't have, even the little you have will be taken away from you. If you come to the markets, for those who are making money, even more will be given unto them. For those who are losing,
Even what they have will be taken.
it is not us. You're only lawyer, Jesus. Think about it.
It's a parable by Jesus, which is very true.
Amen.
So yeah, so that's it for today, guys. Thank you for listening. It was interesting.
For listening to us.
Yeah, and we'll see you in the next podcast. So have a wonderful weekend and enjoy your trading week. Peace.
Hallelujah.